Hey everyone, welcome back to Corporate Decoder. Today we're diving into urban-gro's latest financial report, and let me tell you, it's a bit like walking through a jungle gym of numbers. Are they climbing to new heights, or are they stuck in a financial maze? Let's find out. So, urban-gro just released their report for the quarter ending September 2024, and the headline is "Things are a little mixed." It's a story of some growth areas mixed with some definite struggles, especially in the construction side of their business. We'll unpack all that and see if this company is setting itself up for a brighter future or just facing more challenges ahead. This document is a Form 10Q, which is basically the quarterly report card that public companies in the United States have to give to the Securities and Exchange Commission, or SEC. It covers everything about how the business did over the last 3 months. This particular report covers the period that ended September 30th, 2024. It is basically a snapshot of where they are right now. The name on the report is urban-gro Inc. They're involved in integrated professional services and design build. They work with architectural, engineering, and construction management solutions in areas like agriculture. As of February 18th, 2025, they had a little over 12.6 million shares of common stock outstanding. That is how many shares are currently in the hands of investors. Now, let's put on our detective hats because things are about to get interesting as we dive into the numbers. Looking at the balance sheets, which is a snapshot of what a company owns assets and what it owes liabilities, urban-gro had total assets of about $49.2 million. That is as of September 2024. Compare that to the end of last year, December 2023, when their assets were around $49.5 million. Not a huge difference, but a slight dip on the other side of the balance sheet. Their total liabilities as of September 2024 were roughly $46.8 million, a significant jump from the roughly $39.4 million they owed at the end of December 2023. This rise in liabilities basically means they owe more money than before. Stockholders' equity, which is the value of the company owned by the shareholders, was approximately $2.4 million in September 2024. This is significantly lower compared to $10.1 million at the end of December 2023. This drop indicates that the company lost some value from the stockholders' point of view. Moving on to the statements of operations, which shows how much money the company made, that is revenues, and how much they spent, that is expenses, for the 3 months ended September 2024. urban-gro's total revenue was roughly $9.9 million. That is a noticeable decrease from the roughly $19.6 million they made during the same period last year, September 2023. The net loss, which is the money the company lost after it paid all its bills, was roughly $3.8 million. Pretty similar to last year, which was also $3.8 million. Even though revenue was down, they managed to keep the losses about the same as the previous year. Looking at the bigger picture, for the 9 months ended September 2024, their total revenue was $43.2 million, a decrease from $54.8 million in the same period last year. The net loss for these 9 months was approximately $9.3 million. Compared that to last year's $14.8 million. So they lost less money but still lost money. The statement of cash flows tells us how the company is managing its cash. For the 9 months ended September 2024, they used about $0.8 million in operating activities. That is how they make money from their day-to-day business. Investing activities used roughly $0.1 million, and the company generated roughly $0.9 million from financing activities like taking out loans. Overall, cash increased by $0.1 million. urban-gro describes themselves as an integrated professional services and design build firm. Design build is where one company handles both the design and the construction of a project. They focus on sectors like controlled environment agriculture, or CEA. urban-gro makes money from equipment systems, services, and construction design build projects. For the 3 months ended in September, here is how it breaks down. Equipment systems brought in $3.7 million, services generated $1.9 million, and construction design build contributed $4.2 million. It turns out that some of urban-gro's directors, that is, people on their board, have connections to other companies that urban-gro does business with. For example, one director has a link to Cloud9 Support LLC and Popco LLC. urban-gro sells them stuff. Another director is involved with the CEA consortium, which also contracts services from urban-gro. urban-gro has various prepaid expenses and other assets. It includes vendor prepayments, which were roughly $3.3 million, prepaid services roughly $0.6 million, and inventories of around $0.2 million. urban-gro also has property and equipment like computers, furniture, vehicles, and software. After you take into account how much these items have depreciated in value over time, the net value is a little over $1 million. Goodwill is an accounting term that represents the value of a company's brand name, customer relationships, intellectual property, and any other value that allows it to earn more profit. As of September 2024, urban-gro's goodwill was valued at roughly $9.7 million, and they did not record any impairment charges. Impairment charges are what happens when something loses value. They also have intangible assets like customer relationships and trade names, which after deducting amortization, which is writing off the value of an asset, are valued at roughly $2.9 million. urban-gro also has accrued expenses. These are expenses that have been incurred but not yet paid. They include accrued operating expenses, accrued wages, and accrued sales tax payable. As of September, their total accrued expenses were roughly $4.5 million. urban-gro has notes payable, which is the money they owe to other entities. At the end of September, they owed roughly $4.5 million, mostly from a line of credit. The company has operating lease liabilities with an imputed annual interest rate of 8%. Many of these leases were acquired from the company's acquisitions. The remaining lease terms are from less than a year to 6 years. As of September, the operating lease liabilities were roughly $1.9 million. The company has a few concentration risks. For the 3 months ended September, one customer accounted for 40% of their revenue. Also, 23% of accounts receivable came from one customer. Having a big chunk of business tied to a small number of clients can be risky because if they lose a big client, they could be in trouble. A stock-based compensation is what happens when companies use their stock to pay employees and consultants. For the 3 months ended September, urban-gro recorded $343,000 in stock-based compensation. urban-gro has a stock repurchase program where they buy back their own shares from the market. They have repurchased roughly 1 million shares for $8.25 on average. They have about $1.4 million left under this program. Now that we have a good handle on urban-gro's financial situation, let's discuss what this all means. First, what are they good at? urban-gro has carved out a niche for itself in the CE sector. It's an innovative area with a potential for growth as people look for new ways to grow crops. Their integrated services, which include everything from design to construction, offers clients a streamlined solution. However, some of the risks and weaknesses cannot be ignored. Their dependency on a small number of clients is a major concern. They are also highly exposed to any fluctuations in the market, especially in their design and construction business. The overall uncertainty regarding the November presidential election has had a big impact as well. So what could happen to urban-gro's stock? It is always important to remember that I am not an investment advisor, and this is not investment advice. The value of the stock depends on the factors previously discussed, such as economic trends, the ability to manage costs, and how the company is performing in the CE sector. For a reasonable price target range, it is really hard to say given the losses. However, given some potential improvements in the market and assuming that they can cut costs and increase revenue in key areas, I think a reasonable target price range for the stock would be $2 to $3. So, is urban-gro a buy, sell, or hold? Given everything I just said and the risk factors, I am cautiously leaning towards neutral. If the company is able to really lean into its strengths, find new clients and new relationships, then we could see it go up. That is all for today's episode. Thanks for tuning in and make sure to subscribe for more.